Hello and good morning and a very warm welcome to you. I'm Rachel. You're watching Kalkine TV live from Sydney. This is the Global Markets Roundup show. Let us take a glance at how the global markets are doing today. World stocks stayed close to record highs on Monday as investors weighed surging European business activity and a welcome US jobs report against worries about the highly transmissible Delta variant of COVID-19. The MSCI All-Country World Index closed at a record 724.66 last week. That was 0.1% higher on Monday. Having said that, the United States stocks markets were closed on Monday in observation of Independence Day. The New York Stock Exchange and the Nasdaq will resume normal trading hours on Tuesday, the 6th of July. The Securities Industry and Financial Markets Association recommended the US bond market also close on Monday. US commodities markets, including gold and oil futures, also will not be open for trade on Monday. Currency markets will remain open for trading. The next US holiday is Labor Day, which falls on September the 6th. Moving on to the currency space now, the dollar dipped against a basket of major currencies on Monday after hitting a speed bump when last week's mixed bag of US labor data allayed investor fears about a faster end to monetary stimulus. The dollar index was last 0.1% lower, falling below Friday's levels. But with a 2% rise in the 3 weeks since the Fed surprised investors with projected hikes in 2023, analysts think the dollar has room to rise a bit further. Let's look at some other commodities. Gold prices inched higher on Monday as a subdued dollar and lower bond yields and a mixed bag of US labor data allayed investor concerns about a faster policy tightening, helping the metal rise towards the $1,800 level once again. Oil prices rose on Monday, driven higher after OPEC Plus nations called off talks on output levels, meaning no deal to boost production has been agreed. Brent was up 94 cents or 1.2%, trading around two-year highs. US oil gained $1.11 or 1.5%. This was the latest from the global markets. It's time for a short break now.
Hi, this is Andy Liu broadcasting from Kalkine Media Studio in Australia, and I'll be hosting the new Kalkine Wellness Show. The half-hour show will cover topics from how wellness as a concept has become even more significant during COVID, to how becoming vegan may improve your health, and much more. We are excited to showcase our live streaming show to our audience of millions overseas and in Australia. Tune in to Kalkine TV and join me.
Hello and welcome back. I'm Rachel. You're watching Kalkine TV live from Sydney. This is the Global Markets Roundup show. Let us now take a look at the European and Asian stock markets. Upbeat Eurozone business activity saw European shares reverse session losses on Monday, leaving them just about 0.5% away from all-time peaks, while an almost 12% surge in Morrison set London and mid-caps to record highs. Extending gains to a third straight session, the Pan-European Stock 600 rose 0.3%. Eurozone government bond yields ticked up on Monday amid expectations of rising inflation, but analysts expect the recent downward trend to resume after last week's US payrolls data failed to tempt investors away from the safety of fixed income. Germany's 10-year bond yield was up by 2.6 basis points at 0.209%, while the benchmark French and Italian 10-year yields were up by 3 basis points. Moving on to the Asian markets now, Japanese shares slipped on Monday, with the Nikkei hitting a 2-week low, failing to gain a boost from a Wall Street rally after strong US jobs data, as rising COVID-19 infections in Japan and elsewhere hurt cyclical shares. The Nikkei share average lost 0.64%, its lowest close in 2 weeks, while the broader topics dropped 0.37%. Yields on Japanese government bonds dipped on Monday after US jobs data last week showed strong employment growth but limited wage inflation pressure, reducing expectations of early tapering in the Federal Reserve stimulus. The 10-year JGB yield fell 0.5 basis points to 0.035%, while the 20-year JGB yield dropped 0.5 basis points to 0.410%, its lowest in more than 3 weeks. Next up on the Asian markets, China's major indexes eked out gains on Monday, helped by robust strength in Shanghai's tech-focused starboard companies, as Beijing pledged continued policy support for its tech sector. China's yuan rebounded on Monday from a more than 1 week low against the dollar hit in the previous session, as prospects for an earlier rise in US interest rates softened. In the spot market, onshore yuan opened at 6.4695 per dollar and was changing hands at 6.4628 by midday, 92 pips firmer than the previous late session close on Friday. The blue chip CSI 300 index edged up 0.1%, while the Shanghai Composite Index added 0.4%. Moving on to the next country in the Asian markets now, South Korean shares ended higher on Monday after US jobs reports signalled the economic recovery remained intact, with sentiment aided by expectations of a later than expected rate hike on a slight uptick in jobless rate. The Korean won strengthened while the benchmark bond yield fell. The Kospi closed up 11.43 points or 0.35%. The won ended at 1,131.8 per dollar on the onshore settlement platform, 0.28% higher than its previous close at 1,135. That's how the European and Asian markets fared overnight. It's time for a short break. After the break, we'll take a look at the Australian stock market.
Tune in to get the latest information.
Whether it's about market movements or the currency graph,
Sectoral coverage or industry news.
we cover it all on our news segments.
Be on top of the latest news
With Kalkine TV.
Welcome back. I'm Rachel and you're watching Kalkine TV live from Sydney. This is the Global Markets Roundup show. Let us now take a look at the Australian stock market. Australian shares open higher this morning ahead of an important domestic central bank meeting that may see its cash rate stay at a record low. And as robust commodity prices likely lend weight to miners and energy stocks. The local share price index futures rose 0.12% at 70.6 point discount to the underlying S&P ASX 200 index close. The benchmark closed flat on Monday. Let's look at currencies now. On Monday, the Australian and New Zealand dollars were struggling to keep the ongoing rally alive as investors are getting cautious ahead of the Reserve Bank of Australia's monetary policy meeting, which could see a change of course in its massive stimulus program. The Aussie dollar recovered from its 7-month low. Bitcoin is stuck in a range and has been trading directionless for the last few weeks. On Monday, it was down by 3.31%. Dogecoin was down 4.27% and Ether was down 3.85%. Let's look at the shares that could be under the investors' radar today. The ASX All Technology Index lost 1.06% on Monday and closed near the low of the day. Today, further weakness could be seen in the technology sector. The Australian technology shares to keep a watch on are Afterpay, Xero and BrainChip Holdings. On Monday, crude oil climbed higher as OPEC Plus nations called off talks on supply levels, meaning no deal to boost production has been agreed. Australian energy stocks such as Santos, Viva Energy and Woodside Petroleum could see some gains today. Let's now look at the yellow metal space. On Monday, gold prices traded higher as a subdued US dollar and falling bond yields amid a mixed data of US jobs report diminished investors' concern about a faster policy tightening, helping the yellow metal rise towards the $1,800 an ounce once again. Gold miners such as St Barbara, Newcrest Mining and De Grey Mining could trade higher today. On Monday, the benchmark futures, iron ore futures contract in China surged more than 5%, supported by rising demand as mills resume production after the country's party centenary. The most actively traded iron ore futures for the September delivery month on the Dalian Commodity Exchange increased as much as 5.6%. That's the highest level since the 11th of June this year. And lastly, let's look at the shares in the copper space. On Monday, copper prices inched up to their highest level in more than 2 weeks, underpinned by the US dollar's halt in the uptrend and prompted fund buying. However, expectations of higher supplies to come and slowing demand in top consumer China capped gains. The benchmark copper on the London Metal Exchange was up 1.4%. Australian miners such as Fortescue Metals, Rio Tinto and the BHP Group could see a higher opening in today's session. Okay, that's all from me for now. Stay tuned with Kalkine TV for more live market updates. We'll be back with more news on the markets, the economy, diverse themes and sectors. I'm Rachel, signing off for now.